Good day to everybody. This is a CSR project of Ranaweera Associate to share knowledge in taxation. Under this, we are planning to have about 75 video clips under Inland Revenue Act. In addition to that, we will be covering the other tax laws as well. Saying that, we will start the video clip number 1. Today, we are to learn the basics of income tax. Now, when we are learning a tax law, the most important section is the charging section. As you know, tax is a charge. As it is a charge, we have to learn the charging section. That is the imposition of tax. First, we will try to understand the imposition of tax. Under Inland Revenue Act number 24 of 2017, the imposition of tax is given under section 2. Now, before moving to that, first of all, when we consider a tax law, there are few important common questions. Things like, on what the tax to be paid? Then, who should pay the tax? Then, tax for what period? Now, those are the main questions. On what, who should pay, and for what period? Then, in addition to these few questions, there are some common ancillary questions. Things like whether a casual and non-recurring nature income is also liable for income tax, whether a short time period income is also liable for income tax, whether a non-resident person's short time period income in Sri Lanka is also liable for income tax. Now, we'll first study the section number 2, the charging section, then try to find the answers for these questions. Now, when we see the section number 2, it reads as follows. 2.1. Income tax shall be payable for each year of assessment by a person who has taxable income for that year, or a person who receives a final withholding payment during that year. Then subsection 2 says the income, then subsection 2 says the amount of tax payable by a person for any year of assessment shall be the total of the amounts payable under subsection 1. Then subsection 3 reads like this. The income tax payable by a person under paragraph A of subsection 1 shall be calculated by applying the relevant rates of income tax set out in the first schedule to this act to that person's taxable income. Then B says deducting any foreign tax credits claimed by and allowed to the person for the year under section 80 of this act. Then C, deducting any other tax credit granted or allowed to the person for the year under this act. Then section 4 says the income tax payable by a person under paragraph B of subsection 1 shall be calculated by applying the relevant rate set out in the first schedule to this act to each final withholding payment. Now, we'll try to find the answers for our questions. Now, lot of questions are answered with section 2.1. Again, we'll read that and try to understand. Income tax. What tax? Income tax. Then shall be payable for each year of assessment. For what period? Each year of assessment. Then A person. By whom the taxes to be paid? By a person. The specialty of this person is who has taxable income for that year. Who has taxable income for that year. Then a person who receives a final withholding payment during that year. That means this section answers to couple of questions. Then we will try to put these things into formulas. Amount of tax payable is equivalent to total tax payable under subsection 2.1. Then total tax payable is equivalent to tax on taxable income plus tax on receipts which are to be subjected to final withholding tax. Then we will see the gross income tax equation. Gross income tax is equivalent to taxable income into tax rates minus tax credits. Then final withholding tax. It is equivalent to payments to be subjected to final withholding tax into tax rates. The next step, for us to understand the tax law, we have to find out what the taxable income is. Now we'll try to see what is the taxable income. For that we have to refer section number 3. First we'll read the section number 3 and try to understand. It's read like this. 3.1. Subject to subsection 2, the taxable income of a person for a year of assessment shall be equal to the total of that person's assessable income for the year from each employment, business, investment and other sources. Subsection 2. In arriving at taxable income of a year of assessment, qualifying payments and reliefs for that year under section 52 shall be deducted. Qualifying payments and reliefs under section 52 shall be deducted. Then subsection 3. The taxable income of each person and assessable income of each source shall be determined separately. Each person's taxable income to be determined separately, as well as each source of income, that is assessable income, to be determined separately. Now we can put this into a formula. It is taxable income is equivalent to assessable income minus qualifying payments and reliefs. Then we will put the assessable income formula as well. Then assessable income is equivalent to assessable income from employment, assessable income from business, assessable income from investment and assessable income from other sources. Now when we are learning a tax law, it is very important for us to learn the residency for taxation. You have to be careful that this residency for taxation is totally different from residency under immigration and immigration law. Now under taxation, there are tax resident persons as well as tax non-resident persons. To find out the answer for this, first we refer the section number 4. It reads as follows. The assessable income of a person for a year of assessment from employment, business, investment and other sources shall be equal to A. In the case of a resident person, the person's income from employment, business, investment and other source for that year, wherever the source arises. And B. In the case of a non-resident person, the person's income from employment, business, investment and other source for that year, to the extent that the income arises in or is derived from a source in Sri Lanka. Now we'll put this into a small summary note. That means tax liability of a resident person is on the world income. Tax liability on a non-resident person is only on the income arises in or derived from Sri Lanka. Then as we found the answers for our main questions, now we will see the answers for ancillary questions as well. The tax liability on casual and non-recurring nature income. As per the section 8 of the Inland Revenue Act, income from casual and non-recurring nature is exempted, not exempted. Now we'll try to find out the answers for ancillary questions. The tax liability on casual and non-recurring nature income. As per section 8, the casual and non-recurring nature incomes are excluded from tax law. As a result, casual and non-recurring nature income are not liable to income tax under Inland Revenue Act number 24 of 2017. Then the tax liability on short time period income. As per the Inland Revenue Act, whether the time period is a lengthy time period or a short time period, that is not a matter for taxation in Sri Lanka. Therefore, even that income earns during a very short time period, that income is liable to income tax in Sri Lanka. Then the third question, the tax liability on income earned during a period less than 183 days in Sri Lanka by a non-resident person. Sometimes non-resident persons, they come to Sri Lanka and do some businesses or employments in Sri Lanka and earn income, but the time period is less than 183 days. In that case, whether they are liable, time period is not applicable at all. Even it is a period less than 183 days, it is liable for income tax in Sri Lanka. Then what is this 183 days issue? That is to decide whether there's a permanent establishment, whether there's a PE or not. Now, by reading those sections, that is section number 2, 3 and 4, we learn the basics of charging sections of the Inland Revenue Act. By now, we learn the basics of charging section along with the section number 3 and 4. Now, next step should be to learn the interpretations of important terms used in these 3 sections. Now, we will study these interpretations through video clip number 2. Now, when we are learning the tax law, first we have to see the interpretations given in the tax law itself. If there aren't interpretation for a specific term, then next step should be to refer accepted dictionary meanings. Now, saying that, I would like to wind up this video clip number 1. We'll meet again through video clip number 2 to learn the important interpretations of section number 2, 3 and 4. Thank you very much for giving the opportunity for me to share my knowledge with you all. Thank you.